Morning, good morning, good morning, good morning, good morning, good morning. Welcome to the show, everybody. Oh man, that's a new flavor right there. Whew. It's kind of like a twisted Hawaiian punch. That's how I would describe it. I took one drink. I took the first drink. I was like, "Whoa!" That was It's called. See what the flavor is called. Punk Punch. Yeah, that was definitely a wild one right there. Definitely a wild one. I have to say. Morning, everybody. Welcome to the show. See if we can get this going here. And cool. I just, instead of pulling over the monologue, I X'd it out. I love it. Oh, man. Sometimes I hit the wrong button. Anyway, I'll get it. I'll get it here in a second. And so we had this Blue Owl Capital thing. I don't know if you've maybe seen it. It seems like it's popping up everywhere. But what does it even mean? What did they do? They halted stuff, right? So welcome back to the show. I've got my Monster and grab your caffeine of choice. If you like coffee, great on you. I lean on the Monster. One a day keeps the market at bay, I guess you might say. And we're talking about the sound of silence now, not like Simon and Garfunkel. I'm talking about the eerie quiet that happens right after the canary in the coal mine stops singing. And for us, there's a canary that quit singing. It was a $3.4 trillion private credit market. And it's kind of hiccuping and alerting and maybe a code blue. Anyway, just a few months ago, in November, the CEO of Blue Owl Capital, Craig Packer, went on CNBC after some investor outrage and told everybody with a straight face, no emergency here. Everything's cool. You know, the same way a captain of a ship with a giant hole in the side of it might say, we're just experiencing a little bit of unexpected ventilation in the lower bow. No big deal. And it turns out that there actually was an emergency because Blue Owl, a behemoth with over $300 billion in assets under management, just permanently, and I mean permanently, froze investor redemptions in its retail-focused private credit fund. That fund, OBDC2, sounds kind of like the diagnostic system in your car, right? OBDC2. Anyway, that's Wall Street for you. Your money's stuck here forever. Thanks for playing. We're not giving it back. So, what is this private credit thing anyway? Well, let's break it down. We can think of it like a big shadow banking system for kind of medium-sized businesses out there. And, well, companies that are too big to be a small business and get a small business loan, but too, let's say not big enough to issue public bonds. So you're too big for small SBA. You're too small for public credit markets bonds. So you go to places like Blue Owl Capital. And in exchange for higher interest rates, these private equity funds, BDCs, business development companies, they fund your dreams as a medium-sized business. You know, they kind of promise their investors a steady income and supposedly the ability to get their money out quarterly. It was sold as the perfect product. The stock market like returns with a bond like safety and liquidity illusion, I guess, until it stopped. But here's the rub. You can't have it always. You can't invest in illiquid, untradeable loans and then offer highly liquid redemptions. That's kind of like trying to sell a house in 24 hours every single day. It works until there's a hiccup, and then it doesn't work. And the doesn't work part just arrived, and it kind of spooked the market a little bit. To try to calm some nerves, Blue Owl announced a $1.4 billion fire sale of assets from 3 of its funds. They proudly announced that they sold the loans at 99.7% of face value. See? No problem. All our assets are good. But here's the punchline. Might be a little dark and sinister here. At least one of the main buyers was actually a life insurance company named Couvert. And who owns Couvert, you might ask? Blue Owl Capital. So it wasn't really a sale per se. It was kind of a shell game. I mean, it's kind of like SpaceX buying XAI after they bought X or Twitter or whatever you want to call it. I mean, it's, don't look over here what we're doing. We're just shifting the pieces on the same board. They're moving assets from the retail investor's pocket, which is kind of on fire at this moment, to the institutional insurance pocket, which is a black box that we don't know much about. I mean, it's the financial equivalent of your kid cleaning the room by shoving everything under the bed. The problem really isn't solved. It's just kind of hidden from plain view. And now that the risk is seeping into the insurance industry, my oh my, what could possibly go wrong? The real disease here all kind of started with the software sector. The BDC industry, these private credit funds that are out there, they went all in on software company loans, medium-sized software company loans. They weren't really big enough to get public bonds. They weren't small enough to get SBA loans. It's actually the largest single sector exposure in this whole private capital lending. Software as a service was rocking and rolling until the AI revolution punched it in the face the last couple of weeks, months, if you will, even. So what's happening in software? It's getting its lunch eaten by AI. The entire sector has lost over $1 trillion of market cap. Ouch. UBS is actually warning that AI disruption could cause default rates to spike to 13% in software companies, which make up around 17% of the BDC loan books. Blue Owl's own tech fund, OTIC, that's Oscar Tango India Charlie, has a staggering 55% of its portfolio exposed to software. That's kind of not a balanced fund, but that's a software apocalypse waiting to happen if we get 13% defaults. And this is where it kind of gets terrifying. Let's get the reality check here. The great Mohamed El-Erian, former CEO of PIMCO, just called this potential Bear Stearns moment. Uh-oh. This is kind of like combining the dot-com bubble with the great financial crisis and put them both together, and maybe, just maybe, there's a guy on YouTube who's been talking about this potential for a while. Now, for those of you who weren't around for the 2008 crisis, that's like hearing a world-renowned volcanologist say the mountain you live on is looking a little bit rumbly. Maybe you built your house on a supervolcano. In 2007, 2 Bear Stearns hedge funds tied to subprime mortgages collapsed. The market kind of shrugged. 9 months later, Bear Stearns itself was gone, bankrupt. Boom. 15 months later, Lehman Brothers vaporized off the scene and took with it like the whole global financial system, put it on fire. Now, blue owl isn't the disease itself. It's actually a symptom. I guess you might say it's the first visible crack in a $3.4 trillion dam built on opacity, conflicts of interest, and say polite fiction that you can have your cake and eat it too. And what's the government's response to a flashing red light of danger? Well, a Trump-era executive order is now pushing to democratize this asset class by opening up your 401k to private credit. Sounds like a beautiful solution, right? They're literally trying to sell you a ticket to the Titanic after it's already hit the iceberg. Blackstone, Apollo, KKR, of course, they're all in on this plan. They want your retirement money to bail out their bad ideas and bets. So how do we, the magnificent monsters of the market, play this? And this is where we find the opportunity in the chaos. First off, the losers. Most obvious here. Blue Owl Capital itself. OWL is their ticker. Imagine that. Their fee-generating assets, well, a little bit of question. Their credibility is pretty much shot. The stock is already down 25%, and it could be a falling knife. But downside is there. And beyond that, you have to look at publicly traded BDCs with heavy software exposure. Blue Owl's own tech fund, OTF, Oscar Tango Foxtrot, is trading at a 27% discount to net asset value. The market's telling you that we think they're full of bullshit. I'd say the wise plan here is probably to stay far, far away from that one. Even if it has a 27% discount to NAV, that's net asset value. And then you have contrarian plays. If private credit freezes up, where do these companies go for money? Well, the only real place left is public markets. This could be both a boon for bond markets and the banks that underwrite them. Think about the big boring banks that got left out of the private credit party. Their time could be coming again. Also, but like before I go on there, but they're gonna want a healthy piece. They're gonna want a guarantee. They're not just gonna. Maybe we harken back to the great financial crisis. Maybe it's fast and loose money. But we also have distressed debt funds. They're actually vultures of this market. They're going to be picking over the carcasses in failed BDCs and buying up these loans for pennies on the dollar and then claiming the collateral, if there is any, to claim. But those vultures are smart. They're not stupid. They know how to make a buck out of they know how to squeeze some blood out of a turnip, in other words. And finally, you have indirect winners. There's a wave of bankruptcies probably coming, and that means a wave of work for restructuring firms, restructuring lawyers, bankruptcy processing firms. It's a grim business, but they get paid before the assets get dispersed. This is the moment where the tide goes out and we find out who's got nothing, who's swimming naked, who's shark bait. Blue Owl just got exposed. The question is, who else is next? We've already seen this story kind of playing out for months now. I've been talking about it's kind of started in car parts and we're seeing it spread into software. So don't get caught in a liquidity illusion here. Stay caffeinated, my friends. Stay cynical and look for the cracks in the system. Things are coming apart. Slowly but surely, we're seeing it all. The lights are getting flipped on. The party's coming to an end. We're probably going to have some sort of big market correction. It's just not this week or next week, probably. I'll try to keep you abreast as the situation keeps unfolding and the canaries keep dying in these coal mines. So be careful out there, my friends. Let's look at some charts, try to figure out how to make some money on all of this. Dun, 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 dun. I guess before we talk any kind of charts or trading, let me push that over there. All trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, but it is not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Be careful out there. If you trade, you probably will lose money. The odds are against you if you're trading. And if you want somebody to tell you what buttons to push to make some money, there's people you can hire for that. It's not me. I'm just a dude on YouTube, making a little money, make a little scratch. And I hit a milestone yesterday. Check this out. Check this out. $70,000, baby. I love it. I started out with like $75,000 in this account right here. And I put a little in, taking a little out. Crossing 70 grand. It's pretty sweet. I'm proud of that. Like, now, I still got a ways to go. My goal on this account is $50,000 a month. You know, $78,000 over the last year. That's not 50 a month, right? In fact, look at it, 10 a month. But I did something stupid on the 21st of January, and that's about to drop off. So this is actually going to improve greatly for the month. Now, maybe like, well, where's the big drawdowns? Where's the big losses? Look at the last year. Don't have very many. I don't take big losses. I'm not carrying them forward either. I'm just constantly trying to make a little bit of money in the market every day. And you can see the trades as I close them right down here. They're all in there. Posted on K-Info for everybody. So, there you go. There you go. Make sure that whoever you're following, whoever you're talking about, actually shows you trades, actually shows you what they're doing, their money. I don't make a whole lot of trades in a given day. One, maybe two. I don't do a lot of trading. Maybe you do, but I don't. I just try to end up with a little bit of profit booked out, though. Now, look at the futures. Now, this is S&P 500 futures for you that may not know. We're going to chop it in here a little bit. I mentioned yesterday that this correction might need to go a little lower, and then we could bottom out. Now, we completed a three-wave down, and then we did a retrace, and now we're back near the bottom. This makes it look like this could be a bigger correction. You have to go with the data you got. At this point, this is looking like ABC down for an A. Unclear on the B. That probably looks more like a WXY. That's what this looks like. But that puts the C right down here. And as I mentioned, the way this looked over here, it looked like a diagonal. When diagonal's complete, we usually return right near the bottom. And that's what it looks like we're going to do today. Now, this could get out of control and make a lower low also. So be careful is the name of the game here. It's looking like a more complicated correction, probably a WXY. Since that middle wave doesn't look like it's really made up of anything solid, and WXYs are a little more variable. But the key here, Ys and Cs, both kind of impulsive type moves. This can flush on down pretty violently here today. So be cautious and aware. I don't expect it to go below the low we had the low we had on Tuesday, but it could. And we could go retest the low we had back there on the 5th. So that's what we're cooking with on ES, S&P 500 futures. Why do we look at those? Because the cash index stopped trading at the close and then just reopened and created a gap. And we get gaps all the time because it stops trading at 4 o'clock and doesn't start until 9:30. And we don't know what happened overnight. And there's nothing you can turn on that fills this in because this index stops at the close and reopens at the open. And so it's only open like 6.5 hours out of the day. Whereas this has price action 23 hours a day, 6 days a week. It fills in a lot more information. So I look at this chart to kind of give me a better idea. Look at the NASDAQ futures here. We've got the same sort of fun chart going on here. Might see a dip on down. Now, the interesting thing here is technically with the lower low, that can be complete. Does not have to get to the ideal proportion, but the ideal proportion here with this first move down and the second move down would put us down in this neighborhood right down in here. So it doesn't have to go lower. It's just likely to go lower. Same kind of situation over here, but we didn't quite make the lower low yet. We're kind of tied. Just kind of retested the bottom. Typically, this would go a bit lower, if not all the way down in this target zone. Russell, on the other hand, is a different critter altogether. As I've mentioned, if we can break above this up here, probably cruising up to 3,100. If we break below this, we have support here and then support here. So support there, and support here. And if we break above the resistance zone right in here, probably cruising on up to 3,100. So 2480, 2450, and 3,100. That's a pretty wide range there. Nearly 600 points. Looking at oil. This is going to get spicy. If we go attack Iran, which looking like we might do that this weekend. Wouldn't be surprised if it happened on like Sunday while the markets are closed. If we do that, all I can say is Trump better have a plan to pull this back down, because if oil goes popping out, goes cruising up to 100, inflation in everything is going up. And up big. This is like the biggest component of pretty much all goods and services in the United States. Oil goes higher, well, gasoline goes higher. It's already going, already popping here. Already worried about it. Climbing the wall of worry. Gasoline goes higher, and then diesel fuel also goes higher. These are both looking like breakout charts waiting to happen. Things might get spicy. The pop may be short-lived too. Gold kind of holding its own here. This might... It's really unclear. We pop above here. I think we have potential to come on up to this C target. But we also have the potential, if we don't break above that, to come breaking on down, get lower low, and probably go visit the daily roadmap line. This is a really big range here. We're talking about 5,600 and 4,100. So that's like 1,500 points on gold, which is more than gold used to even cost back here. Just like a couple years ago. Crazy. 4 years ago, I guess. So the price move that we could, the range we could play in, is bigger than the price of gold used to be itself. So definitely want to watch out for that one. Volatility, the name of the game in gold. Down is probably what we're going to do, but then that sets up the bigger upside. And the biggest opportunity in precious metals, probably palladium, is my just wild hair guess here. Sometimes I get it right. If we pop down in here, might be a buying opportunity in palladium. Palladium, however you want to say it. Pall. This has a large upside potential. Talking about 364, maybe even 400. Nice. Nice. So those are on the gainers list, actually. Now looking at Bitcoin. Still filling out the squeeze. Is it going to pop? Is it going to drop? Not sure. Unreliable pattern. Be careful there. Ethereum, same situation. Came up into it. And see, this one looks a little more clear on the fact that we came up into this, because this doesn't, it's not, it's the flag or triangle or whatever you want to call it. It's a triangle. Triangles are typically B waves. So you've got an A. This is probably a B. And that would leave the C potential coming out of here. Now the problem with that is that continuation would be lower. And even on an optimistic pop, we're looking at like 25, 2600, maybe only 2300. Then continuation. Trend. Pullback. Absolutely not really beautiful, but correction. I would normally label it absolutely beautiful correction, but this crap in here makes it not so beautiful. And that would lead to a lower low potential on Ethereum. Bitcoin less clear, but maybe has the same thing cooking here. Possibly. So we could see this pop. Could be an A, B, C that pops us up into the 85,000 area. And this move out of here could kind of, it didn't have to be a straight up pop. It could be a pop that goes like this for a few months. I don't know. We'll see. And this could be the first move, the A of the ABC. It's funny enough that this actually corresponds with where I drew the A. We could get a B wave correction that comes back down to like a 618 from here to here. And then pop it up to a C out in that May-June time frame I was talking about. And then get more downside. Kind of interesting. That would be a flat correction. Three-wave move, a 335. So it'd be a flat correction and then probably go on down. Dollar index coming up, resistance right up here at the roadmap line. And then possible downside. It's funny. I do appreciate you all coming and hanging out with me. Mainstream media loves a story. Us humans love stories, but there's no real story to all this stuff. It's just price action. The price charts tell the story. And then we, the mainstream media humans, we humans, put reasons to why this stuff happened. These price charts are already here. They're already telling the story. And even though I started out with a monologue with Blue Owl Capital and a software story and AI, blah, 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 the charts are already telling the story. It's just the reasons we put to it. And this is the mind bender and all this stuff I'm doing here, is that the charts make the news story that matters. It's, you know, a classic one I did years ago now. For those that were paying attention to me, I mentioned that Boeing had topped out and was about to go on a large correction right here. And I didn't know a door was going to fly off the thing. I didn't know they were going to have all sorts of issues with the FAA and inspections and all that stuff. But I got accused of going and unbolting doors. They caused this thing to drop. And funny enough, before a chart will turn around roughly 6 months before the story improves on a company. And the story's improving for Boeing, but, and you know, we kind of turned the bottom April 25, and now, you know, late in 25, then the story started turning around that, you know, their production's getting back up and all this. So this has the potential to keep going higher, but that's the real mind bender, is that I don't really care about the story. A lot of these, I don't even know what the freaking company does when I talk about these charts. So the dollar has no earnings, has no nothing. But you say it's all geopolitical and this, that, and the other, and tariffs and wars and whatever. But right now we're working on a 3-wave move up. That likely tops out right in here. If we do that, continuation would be down. But if we get up above, if we actually extend this on up here and come on up to 102, we're going to start stopping out big shorts on the dollar and cause the whole short dollar narrative to implode on itself as we probably cruise on up to like 130, 140 on the dollar index if we really take this higher. It's just really going to flip the short dollar narrative and weak dollar narrative on its head. NKD, I look at this as a global liquidity indicator. And it's starting to show signs that we may take a big spill here. And if we take a big spill, typically that brings the US market down with it. We saw it happen once. We saw it happen twice. Right there. In just recent, I mean, that's just 24 and 25 right there. You can be like, oh, well, Liberation Day was about the tariffs and blah, blah, blah. It was already on the chart. It was on the chart February 28th. You can go watch my video from February 28th last year. I drew the exact pattern that we were going to do on the S&P 500. I drew this exact pattern, even right down past 5,000. I even showed it. Probably going to hit the, not the monthly, the weekly roadmap line. And that's exactly what we went and did right there. We went and hit that weekly roadmap line and then bounced. So it's wild to me that I can predict the price before it happens. But this is starting to look like another one of those where we're going to take a big swing. It's just I don't know if we're going to do it now or a few months from now. Probably going to do another nice big fat swing down. Apple. If we can hold on to this, upside potential is up at this 295 area. We can hold on to the roadmap line with a higher low. If we get below it though, probably coming down here like 207. Amazon probably made the bottom. The narrative around Amazon might start changing here. Google, this one could rally. So difficult. Is that A, B, C? And that's complete. Right at those prior lows from back here in December. Or was that like a first move down? We're going to get a little retrace and then take a little bit bigger spill down here before we can go higher. I'm not so sure on Google. unclear at the moment on the path. Meta, on the other hand, has a nice setup. I saw a relatively large following YouTuber talk about he was dumping Meta. Got a lot of views on it. Came through as an outlier video. It's probably the worst time to dump it here because this is probably going to pop in a big way. 1100 to 1300 is my target area. I actually, started adding some exposure to it yesterday. That's what I'm looking for. Microsoft hunting for a bottom here. And the way this price action is right here, it looked like that was the bottom. That was kind of an event bounce, but then we're bleeding back down. Probably going to make a lower low before we can actually bounce. Nvidia, we are stuck underneath this 195 resistance. And this support right down here at the roadmap line around 175. Get below that, we're going to 150. We get above this, kind of up to about 220. And Tesla. So the shorts are piling on, and I think that presents the opportunity. People are buying millions of dollars of puts. And I think that starts to present the opportunity for this to go higher. Opportunity. Now, we need follow through. We need to actually do some stuff. So, jumping over, looking at the gamma chart for Tesla. It's usually pretty devoid. And see, we got a big level down here at 400. These levels aren't giant, though. For a single stock, I guess they're fairly big. The levels, we had a lot of people playing up here at 600. Those are pretty much evaporated. So we got a bunch of people playing calls in here. We have a lot more people playing puts. The put side is heavily skewed. But guess what? Almost all that expires today. Got a little blip here at the end of the month. Another little blip here next month. Tesla may just fart around and burn these options off through the end of the month. Then start moving. These things love to screw the most number of people they can before they start moving. So it'd be kind of funny if all this turns off through the end of the month and then we go ripping off to 600. That'll be interesting. Now, the other interesting thing here is that maybe Elon's trying to suppress the price of Tesla itself so that SpaceX can buy it out. Boost up the value of SpaceX. And maybe SpaceX doesn't go public. Maybe Tesla just gets private equity bought out and rolled into SpaceX. Be an interesting play. So stay tuned. We'll see what happens. Netflix probably going to drop on down. 60 to 70 zone is where I expect us to visit next, and then we'll see if we can hold that. So I go pull poppers and droppers. Things moving up in the pre-market for the poppers list. Things moving down in the pre-market for the droppers list. Hunt for some opportunities. KORU. Now it's also back to, I talked about the narrative around something. That sowed a good story there, but the chart for Tesla actually support's going bullish unless we break down. So it could just screw all the the options buyers, and this could actually pop. The time frame for a buyout doesn't have to be any kind of logic. You know, this could pop. We could see it shoot up in here and then do an epic pullback just like we did back over here. And that could be the point where SpaceX acquires Tesla after we pop up, hit the target, and then pull back. Could be interesting. We have a bullish setup now, but maybe later in the year, things are going sour, grapes, and we actually return back down in here, and it presents an opportunity for SpaceX to acquire Tesla. It's kind of interesting on the chart pattern, right? I mean, you look at the value of Tesla right now, 1.5 trillion, and that's roughly the value of SpaceX. So if the price here, this shot up to like 600, but then took a bath and went down below 200, that all of a sudden, 750 billion, maybe even down near 150, could easily take the SpaceX equity, especially as it climbs, and roll that into some sort of leverage buyout of Tesla shares. Just throwing that, you know, just put that in your pipe and mull it around a little bit. The whole narrative's around SpaceX going public, but what if it doesn't? Elon, very vocal about not liking the, I guess, corporate bylaw structure of Tesla. It's very limiting what they can do. So, fix, comfort systems, rock and roll, 1689, Korea, 3x leverage. I keep mentioning this is going higher. EWY. Got the upside target right up here at 150. Let's see, app 11. Hunt for a bottom. We can get back up through the roadmap line. This could be bullish for 800. Or Kiva. Man, that's a gnarly chart. That's not been doing anything for a while. I could be, the correction here could be done finally. We move down, 3-wave retrace, and lower low, but it could come on down to 39 before we actually bounce. Texas Roadhouse. That's doing a watermelon seed squeeze. Wouldn't surprise me to bounce on in there a couple times. Onto 275 target. DGP, potential to come back to the roadmap line. PPLT, Platinum, potential to come back to the roadmap line. But then we could see some upside bounce going. Ring Central. Significant resistance in here. This could be the lowest low. This is interesting chart pattern here, I guess you might say. Move up, retrace. I'd look for resistance at 43 to 51, which is kind of where we topped out all these other tops here. GE, popping again. It didn't do the head and shoulders. It just kind of rejected it, and boom, shakalaka. New highs, 357, 375. Celsius, go baby go. I'm bullish on Celsius. I don't have any exposure to it right now. Thought about it, but the premium just with the beta at 0.5, it just doesn't have good option premium to be selling options, which is what I like to do and stuff. Easily come up this area, probably get on up in this area. And when we get on up in that area, I mean, we already activated the big picture bounce here. Maybe even like a monthly. I bet it doesn't have enough candles. Oh, it does. Look at that. So we have this bounce. Didn't actually touch, but got freaking close. Sets up 126, 153 on the upside. Actually activated it right there. It just could take a while. Take a long while. I didn't think Celsius had been around long enough to have a monthly roadmap line, but it apparently has. Yeah, it didn't hit, so interesting. It's probably a 3-week chart, maybe. I don't know. That just keeps ripping. We got the low, we got this first move up, we got the retrace, and the next move up, 154 to 300 up here. Roger, are you back for the dentist yet? You still got to go later on this afternoon. We can discuss timeline on your on your day. DEO, TNDM, maybe a bottom. Find. It looks like we're grinding lower. Ideal target on lower. Nice. Maybe the bottom. Palladium, Live Nation. Talk about a company that sounded like they were going to go bankrupt, but shooting up higher. I mean, the news was bad over here, and then here it goes ripping out. 195 upside target there. How do you play Meta? I don't know what Meta. MITA. MLEC. Potential for this to roll down. OPEX. Man. So many nasty charts. Silver probably come back to the roadmap line. Came all this way so far. Be shame not to finish it up. ANPA. Rich Sparkle Holdings. That sounds like a joke almost. Grail. Came back to the roadmap line. Looking for that too. So that may be played out on the first move up off the lows and be looking for a retrace back down around 29 VICR. Look for that to come back to the roadmap line. Akame. Back down to the roadmap line. Race. Look for that to extend to 300. Baidu probably going to hit the roadmap line again. Carvana hasn't found a bottom yet. Wait for that to bounce, get up through 415, 522, but every extension lower pulls this chart on down. Adobe, come on, reach for the targets. So close. We've come all this way. Let's just complete the target. Right down around 200. Illumination, Illuminati, whatever. Illuminati. Doesn't look bullish yet. NEM, played out. Twist. Ooh, that's a nice breakout of a downtrend. Could get extension 70, 79. Coparts has not found the bottom yet. Reaching through where I expected to bounce. HubSpot. Lower low. This can be complete. NetEase. Still retracing. Coherent. Roadmap line. Test is what I would expect. Baba. So, like Baidu, doing a double hit. Higher low. Sets us up for a bigger bounce. If we get back up through around 160, we'll probably, maybe 170, we'll probably see more upside going here. And this actually did trigger the upside target. We're just doing a secondary roadmap bounce. If we can hold on to it, targets are still up here in the 200 area for now. FUTU has not found. Look at that beautiful ABC. Absolutely beautiful correction. Probably just got a little more to go. Bloom Energy. That's played out to the upside. We tag the 1272. Watch for a retrace the roadmap line. Extension 225 on the upside. LEU. Citrus. Looks like we need to extend this down just a little bit more. And then this would be a potential major bottom here. Let's see, URA. Oh, yeah. I got a few hundred shares of this. Some upside calls at 65. Thought I was going to get called out right there, but did not. Looking for that to get continuation. Ego. And probably coming back to the roadmap line with gold. Net Cloudflare. Upside potential 277 when everything gets back to normal. CoreWeave has potential to be done. Like that can be a 618 bounce, but we've got to actually break through this downtrend of highs. This is the confirmation. So initial is to break through this downtrend. Confirmation, breaking through that at 150. Big upside potential, but it's got to do it. It can't keep screwing around here. Nothing. ALB, retesting the breakout. Dash. Could be done on the downside. Oh, thanks, John. And XPI. Watch for the roadmap line. BWA. Yeah, watch for the roadmap line. All right, setups for today. Before we get too far down in the weeds. CNC, here's the high, here's the low. Well, there's the high. There's the close above the 618. Is this a trend? A pullback. Here's our continuation. This is the entry. Target 49. Now, statistics for this baby. 25.72. Negative profit factor. If you're going to go after it light. But these statistics don't mean anything because this is not a statistical population. So the average is 75 and 1.2 across tens of thousands of these trades. GSBC, another trend, pullback, continuation potential. There's the high, there's the low, entry, and target 68.86 for Great Southern Bancorp. 23.78, 1.6. OMC, another setup, but I'm not keen on the downtrend of the roadmap line. Doesn't mean it won't work. I'm just not keen on it. That's not my favorite ones to take, but it's getting close to the target already at 85.75. So watch the stop is always dollar below the low. So watch out for the higher risk on this one. The risk rewards already kind of skewed because you could only get upside targets there, but the stop is all the way down here. 65. So yeah, be careful on that. It's like at one point, yeah. We've seen ones that if there's 7, 1 reward for 7 risk, which this is like 2 reward for 18 risk. When they get to be 1 reward for 7 risk, they tend to fail more often than not. And this is a downtrend, so this could pop right up in here, come up close, and then stop out. I'd be careful on that. On holdings. So it has a bigger potential pattern that played out in here, but just looking at the daily pattern, move up off the lows, retrace. There's a potential reversal setup. Move up, retrace, 3 waves, continuation, 52.39 target. And it's looking like we might just reach up there and tag it pretty quickly. OSIS. That was in it from back here. This is a nice uptrend, pullback, came up shy of the 300 target, secondary bounce, like we've talked about on several other ones. 352 still the upside target. If you wanted to play off the shorter term one here, you could go for 302 target. SPNT, another nice uptrend, pullback, potential continuation here. There's the high, here's the low. 23 target on that one. No historical significance. But now, looking at trying to read the tea leaves of the options markets. See what we got for SPY and QQQ. Yesterday, I got pretty dang close. Look at that. Pretty freaking close right there into the close. That was pretty darn sparky. Let's see what we got today. Silver. Grabberdoodle. All right. Dun, 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 dun. Finally made a ruling, huh? I don't think it matters. Supreme Court. Whatever. I don't think the tariffs mattered. And Trump probably be angry about it all, though. So looks like on SPY, nice Gex bubble. We're kind of at the bottom of the range here. That 685 is still pretty strong in here. It's being replaced by the end of the month. 695. I mean, that's 336. 695. I'm looking at like two different places on the chart. So 695 over here. 685 on the price. 696 at the top of the bubble. A nice healthy 590 up there. I like that. So let's draw the range there. 685. Which pulls up from the 675 we had yesterday, which is right at the, oh man, 685. Let's go 684 just to cover the little bit of downside there potential. Gonna put that there. We're gonna say the top of the bubbles all the way up at 696. Nice upside. Now this could turn south, like I was talking about on the ES charts. We don't have to keep this. There's actually a fair size bit. Actually, I'm going to pull this down now that I scrolled down. There's actually a large level of 440 right there. And so I'm going to go 679. Not going to leave that out. We could go visit that 440 level at 680. So I'm going to pull that on down. This is one of those, like it's developing. It's still not fully cooked yet. There's big levels all the way down at 675 still. Almost 400 million. There's 200 million down at 670. So if we got into the red, things could get nasty pretty quick. That's the crazy thing here. We could go ahead and flush this on down and then bounce. So looking at the gamma exposure levels here, it looks like we would probably hang out right around this 686 level today. Possibly 685, 686 for SPY. At least later in the day. So even if we get a big diversion down, we may rally back up. So it may be a dip and rip situation. Like the market may get bummed out about these tariffs and whatever. And then, we'll see what happens. So I'm going to go with 686 for right now. That's my reading the tea leaves for SPY for the rest of the day. And we could go ripping up, but down, there's a lot of heavy levels down. But the market's unlikely to leave all those puts with profit. So we may hang out up here, and then next week, whether there's very few options players out here, and see that put level, we may take a big dip next week and then recover quickly because we burn off all the calls today. And there's barely any calls being played out here. Today's the monthly OPEX, if you didn't know. And let's go with Qs. Slip over there. I like to play in the Qs better anyway, especially with NASDAQ. IndieX. Man, look at that. Yesterday, I got that darn close. Look at that. We hung out right there on the freaking level. Man, oh man. Sometimes I get lucky. Let's pull this over. See what we got on the cues for the heat map. No bubble. Don't like that. Dang. That level. Wow. Right now, I'll almost be surprised if we don't go visit 600. Have we already been there today? Yeah, we've already been there today. That's where we started. We're going to go 595 on this sucker on the low end because there's a big level down there. Not nearly as big as 600, but we could take a trip down to 595 pretty easy and then come back up. Volatility day is what this looks like. Or, it has the potential to be a volatility day. And then on the upside, there's not really crap on the upside. Maybe 610. So this will be interesting if we just go ripping from here. The options not really saying we're going higher. We're starting to build a couple levels, it looks like. Now, like I said, 10:30 this starts firming up, and we got like 10 more minutes for that. But it can change throughout the day. And look at that. That already dropped from 700 down to 600 million. So bleeding them off. It's dynamic. That's one reason why I watch it throughout the day. Looking at the gamma levels, where might we burn everybody up? And there's hardly anybody playing after today. Funny enough, looks like we might screw the most number of people at 607. Which is right where we are. Be interesting if we hang out right there all day. Thing moved. Oh, it's 6. So there's these max pain levels and stuff like that you can go after, but I kind of look at the summation of the yellow and the summation of the purple. Where would those kind of be balanced out? And it's somewhere right around the 607, 608 area. And you can see already big levels jumping in there. So we may see the heat map develop a bubble. And we're cooking into a bubble. So we may need to pull that on up to 615 on the upside. Bigger range for Qs. A little bit of bounce cooking. So it's unclear. There's no solid bubble cooked in here. It's definitely changing, evolving as we go. It is an OPEX, so this tends to be stronger because there's more players on the Fridays than there are just regular days. So this, as the bubble develops, it should be stronger. The Q just doesn't have a big bubble cooking, and SPY has a bigger bubble already set up. I call it a bubble. I've not heard anybody else call it that. I call it a gamma bubble. And yeah, I'm still holding TSLL. We had no reason to not to. My cost basis is like 4 in one account, 10 in another account. So this bubble's really clear. It's odd that 689 doesn't really have much play in there. 700 million level sitting in the bubble too for the end of the month, next week. Yeah, this is the third week OPEX. Then we have next week is the end of the month. So this will be interesting to see how this plays out, I guess you might say. I think SPY probably has the more influence over the price today. Although SPY and QQQ, totally different things. So be careful on all that. And that's the expectation today. I'll be on Market Masters 11:30, about an hour. And links in the description. And we'll see you on Monday. Same bat time, same bat channel. We'll try to figure out where this thing's going. I'll post the beer money trade on X when I do it, if I do it. And have a great day. We'll see you later.